little break, but we will resume today again. We were having a lot of panels today regarding the metaverse, and we're very happy to be joined here today with the guys from TDMM. And Ankur here will be talking about native digital assets and how that's going to change in the Web3 era. So without further ado, I'd like to welcome him on stage so that we can talk. Thank you. Do you have a mic already? Oh, you will. Sure.
Thank you for the introduction. Uh, Good afternoon, everybody. My name is Ankur, and I head operations for TDMM. TDMM is basically a company which is into market making. We make markets for the tokens which get listed on centralized or the decentralized exchanges. Uh, so today we'll talk about what, how crypto assets are different from the traditional asset classes. So, just to give you background, I come from a traditional financial background. I have been in financial market since 2004. In fact, exactly 18 years back, in October 2004, I started my trading and financial journey. I started trading short sterling, which is a short-term interest rate product coming from the traditional asset class fixed income. And thereafter, I have managed traders. I have traded other asset classes, which include commodities, fixed income, equities. And about 3 years back, I shifted to the digital asset classes, obviously the crypto. And now we are into market making of the crypto tokens. So just to understand, and if I try to draw a parallel between traditional asset class versus crypto, the first thing which we can discuss is how ICOs or IDOs are different from IPOs. I think all of us must be knowing that ICO is the initial coin offering where the token is offered to public for the first time, right? And similarly, the IPO is the name used in equity space where where the different companies would offer their stocks to public for the first time. That is called initial public offering, right? So uh, again, obviously the objective for both of them, like be it ICO, IDO or IPO, the objective is the same. The, the objective is to raise funds, but obviously the stage of the project is different for both of them. The idea is to raise funds for growth or acceleration of the project or the business entity, right? Uh, Again, just a small question to the audience. Any idea what kind of numbers people are expecting to raise when they go for IPOs or IDOs? Nobody wants to talk. It's okay, but just to show you the, like some of the prominent IPOs and IDOs which got listed in recent years. So on the left-hand side, we have a list of one of the most prominent IPOs of our times. Obviously, the number one is Saudi Aramco, which raised 25.6 billion in its IPO. It's the biggest IPO we ever had in the equity space. Then on the second on the second position is Alibaba, which raised 21.8 million, and the SoftBank is on the third, which raised about 21.3 billion. So you can see the all top 10, like they are all in billions. So the 10th one is at 14 billion. So that is kind of money people raise when they go for IPOs. And again, I think if by now you can understand the IPOs are presented only when you have an established business model. When you have proven your business model and you are already generating revenue, then only you go for IPO, right? So that kind of capital, obviously, like you can't raise when you are in initial stages of your project. While as if we talk about ICOs or IDOs for crypto tokens, they are done at very, very initial stages. For most of them, even the prototype is not made, and they just have idea and a team which is backing an idea, and they have their business models, they have their forecasting for the product and the business, and they, when they go to investor or in fact go to public for raising funds, so obviously they try to raise funds which is in a few millions. It could go up to few hundred millions, but normally it ranges in 10 to 20 millions. The average is around 10 to 20 million for IPOs. So these are some of the top ICOs you can see. The top two, in fact, raised their money in billion. EOS, yeah, raised 4.2 billion. This is the biggest ICO we ever had. Telegram, I am not sure I should have included this in the list or not, because they had to draw it back. And then obviously on the list, you can see just after the second one, the third one is at a marked difference. At a mark, you can say there is a big difference between the second and the third ICO. Like the money raised is 575 million at the third position. And if you look at the down at 10th position, the Dow raised about 150 million only. Again, we are talking about the top 10 ICOs, right? In general, the ICOs would raise somewhere around, let's say, 10 to 20 million. And in fact, in these markets, it's even difficult to raise 10 million, right? So that's where like it's a big difference between ICOs and IPOs. Obviously, the process, like once you have your ICOs or IPOs, then you get listed on exchanges, be it token or the equity. Obviously, there are bigger exchanges for equity, well-established ones, having, you can say, huge amount of norms which they have to pass before they get listed on those exchanges. And if we talk about ICOs, it's not so stringent. Anybody and everybody can get listed. It's very easy to get listed on DEXs. Even you, like, there are no listing fees even, right? DEXs is the easiest one to get hold of. But if you're aiming for a centralized one, you have to spend some money. And obviously they have some norms as well. But they are not so stringent. They are not, like you can't draw a parallel with IPOs. It's a huge task when you're going for IPO, and obviously the stage is very different from ICO stage. I think we already talked about the stages for ICOs and IPOs. In terms of regulations, mind you, like if you are going for an IPO, you have to go through stringent rules, regulations. The topmost authority, regulatory authority of your country, you would have to pass their norms, right? But if we talk about ICOs or IDOs, you normally are regulated just by a smart contract. Obviously, in terms of listing requirements, as I told you, DEXs, it's much, much easier. Anybody can go and list their tokens. Centralized ones still need some listing fees and some kind of, you can say, basic norms. But IPOs, you have to prepare at least 6 months in advance. There are a lot of regulations, a lot of things, a lot of certificates you have to get before getting listed on those equity exchanges. So basically, when somebody invests in an equity, they are becoming a shareholder of your company. They are becoming a partner in your company, right? So from like what they earn is dividends that is coming from the profits of the company. While in ICOs, it's more of a value appreciation. Like people invest in the early stage where token is still at a very low price, and once the project does fine, it comes to a business stage, then obviously it's expected that the value would rise, and that's where the people who are investing in tokens would make profits. In terms of location, Like say, if you want to invest in equity or IPOs, you can easily do in the country where you live, right? But if you have to invest in the equities of different countries, it's very difficult. There are rules and norms which you have to follow, and there is a particular limit within which you can invest in other countries. While in in ICOs or IDOs, you can invest it from anywhere in the world, right? It doesn't matter whether the project is in the US or Europe, and if you are in Asia, you can still invest in ICOs or IDOs. Again, one of the requirements, obviously, it's very simple for ICOs, where you just need to have a wallet and you can just go on and add some money, some crypto stable money, and then you can go for the ICOs. Whereas in case of IPOs, you need to have a proper demat account where proper KYC is to be done, and then only you can invest in IPOs. So this is a small chart which shows in terms of reliability, legal coverage, requirements, so how they are placed. So obviously, in case of ICOs, the reliability factor is much lesser. Even the legal coverage is not much. You don't have much of company records. But in terms of execution, yeah, ICOs or IDOs are much faster. You can start with small investments, while in case of IPOs, they are much bigger investments. But when it comes to reliability or the confidence factor, you definitely have it much more in terms of IPOs. So these are some of the facts. In 2022, there have been a total of 992 IPOs. I'm sorry. And if we talk about the ICO projects, it has been more than 7,000 projects which got listed in 2022. Okay, since I come from traditional financial background and I moved to digital asset classes just about three and a half years back, I would always draw a parallel to what kind of returns we get in crypto asset versus what kind of returns we would be getting in traditional asset classes. Again, a small question to the audience. So what kind of returns you think is good for your investments? Obviously, it depends on geographies and the kind of instrument you are investing. But let's say if we compare the traditional asset classes, which include, let's say, fixed income, equities, or commodities versus digital asset classes. So normally, what kind of, so somebody is saying 10%, 8%. Yeah, again, as I said, if we talk about traditional asset classes, it depends on geographies. Let's say, for example, if you are in US, even if you are getting a return of 4% today, it's good enough. It's somewhere related to your GDP growth rate and inflation rate as well, right? So obviously, inflation means that the value of your currency or your money is depreciating. So you need that sort of return, the safe return that can match inflation at least. So if we talk about US today, even if you are getting 5% return, it's good enough. But whereas if we talk about South Asia, countries like India and China, where the economic growth rate is about 7%, 8%, even the inflation is much higher, there you would expect a safe return of about 7, 8%. While when we talk about crypto, and again, I come from traditional financial background, and I talk, like say, when I moved to crypto, I was taken aback when people say we expect 2x, 3x, not 3x, 10x, 20x. It was really shocking for me, but somewhere I feel that's where this volatility is there in the crypto assets, because people are expecting that kind of return. Obviously, we are in a transition stage where the world is changing and the new technology where we expect maybe crypto would take over almost all financial technology maybe, but still I think expecting a return of 10x, 20x is somewhere unreasonable. Or in a period, it's just a matter of time where things will get rationalized and those kind of expectations would got mitigated. Like you can understand somewhere a guy who is coming from like core finance and he says the good return is about 10%. And here is a guy, 20, 25-year-old, he's saying it's easy to make 2x, 3x, 5x. I don't think it can exist forever. There could be small time when it exists, or let's say, obviously, as we talk about technology, that technology, crypto technology is going to bring a big shift, but still, it may happen with one or two projects in 100, right? It can't happen with all of them. So somewhere that expectations needs to be rationalized. So today, like Bitcoin is around at 19,000 and it has plummeted about 60% from its top. But just to tell you, it's not something just particular to crypto. It happens in traditional financial world also. Many a times, mind you, it has happened that in a matter of few days, equity market has plummeted by more than 25%, 30%. It has happened in 1987, it has happened in 2000, it has happened in 2007, like subprime crisis, sovereign debt crisis. It has happened many a times. So it's not something, obviously, when we talk about crypto markets, it's much more volatile. But still, those kind of upturns and those kind of down move happens in the traditional financial markets as well. So if we talk about the market capitalization today for crypto tokens, it has come down from, like once it reached more than 3 trillion, and now it has come down to about 1 trillion. But still, some of the positive things which I can see now is even after this big fall, current valuation of crypto token is more than GDP of 90% countries of this world. So 90% of the countries, like about 180 countries, have less GDP than the valuation of crypto industry. Some of the positives which happened in last few months for crypto industry is like more than in a survey which was done for US merchants, more than 85% of them are viewing enabling crypto payments as a highest priority. They want to enable crypto payments for their customers. So one of the biggest exchanges, in fact, the biggest exchange group, CME group, now has Bitcoin futures and options. Some of the biggest brands in the world which are accepting crypto payments. Again, you can see the top ones from all sort of industry, be it travel, food, and any, like even tech industries, they are accepting payments in cryptos now. So somewhere what I'm trying to say is, obviously we need to have a rationalized approach for cryptos, but at the same time, there is a bright future for these asset class. Another slide where some of the positives again, BlackRock joined a $400 funding round in stablecoin issuer circle. Countries like Switzerland working to put a legal framework. Goldman Sachs traded its first over-the-counter Bitcoin option. So overall, what I'm trying to say is, yes, it can't be 10x, 20x, 50x for every project. But if we talk about future, definitely it's bright for crypto assets. That's where I would like to end my presentation. We have a small video that is about TDMM, which is my firm which I represent. It's into market making of crypto tokens. Can you play this video? anybody who needs us, anybody who wants their token to be managed can always approach us. We just have a pavilion there, which is Trade Dog Pavilion, and we are part of Trade Dog Group only. Thank you guys. I would be happy to answer if you have any questions for me. Yeah, please.
Hello, thank you for the great talk. I have a quick question. When there's an IPO, there are a lot of inspection, due diligence, and all these sort of measures to make sure that there is no scam, there is no issues with the company. When there is an ICO, a new coin comes in with a new idea, which might seem interesting, but there is nobody who actually verifies whether or not these tokens are actually are doing what they are expected to do, because most of these tokens are invented to do something. There is a value proposition for customers who actually use it in certain transactions or anything. So, but I don't know if there is any way to verify that, make sure that, let's say, if you use this coin, the company behind this coin is actually using that coin to conduct those transactions and stuff. So I'm not sure if there's any way to make sure about that.
Obviously, there is no official, thank you. There is no official, you can say regulatory body or some verifying agency which does it. But in general, like we are part of ecosystem called Trade Dog, and we have a incubator called TD5. So most of these projects, like especially these crypto projects, they are helped by some sort of incubators or even the early stage investors, right? Like somebody who's believing the idea, somebody who's knowing them, somebody who's working with them. Like for example, TD5 currently is working with about 70 projects. So whole of this arena you are seeing just behind it belongs to TD5. And TD5 has incubated all these projects where we do our due diligence, where we make sure that the investors we are connecting them to, the projects we are connecting to the investors, they are good. They can bring some good rewards for them. So that's where like you can also do your own due diligence, like who all are the people who are connected to those projects, who are maybe incubating them, who are the investors, who are the early stage investors backing them. So those kind of due diligence you can do on your side to make it sure that whether the project is good or a scam.
So this is the only way to create trust, right?
Yeah,
because I was just thinking that if a project has a software bug, software issue, that there's a leakage in the value of tokens somehow, who can actually verify that? Even if it's not intentional, it may create problems for the investors who actually buy these coins as ICO investments. Things like that might happen, and if there is no there is no track record or any due diligence on financial sheets, there must be some similar thing on the software side, on the project side. You know what I'm talking about, right?
No, I think it's a common problem, and yeah, I can very well understand somebody who's an investor would be wary of such thing, and that's where some of the agencies are coming up where they sort of certify your smart contracts. How good are those smart contracts? So that's where like it has started happening. It has not gone up to a stage where you can completely rely on them, but these agencies are coming up.
I think it's a good business itself
Yeah,
to verify.
it's definitely going to be a good business, and
All right.
that's where like some of those agencies are already coming up.
Very good. Thank you very much.
Thank
Yeah.
you. Thank you, everybody.
I have a question.
We-
Sorry. On one of your slides, you said that like KFC, Burger King, PayPal, Booking.com accept crypto payments. But is this in UAE? Because I've not heard like KFC announcing here they're accepting, or I don't know, Burger King or
No,
Booking.
all of these companies have like somewhere shown the intention to accept it in crypto. Obviously, it depends on the legal and regulations of the zone where they are operating. But yeah, like most of them have, like some of them have already started using it, and some of them have already expressed their desire to use crypto payments.
Thank you.
Thank you.